Hey guys, I'm Bill Losey, America's retirement strategist, and if you give me just a couple minutes of your life, I'll give you 20 years of mine. Today I'm going to address a question from one of my subscribers about the stock market volatility and how to protect yourself, and I'll get to that in just a second. But first I wanted to take a moment to tell you who I am and why the heck you should listen to me. In case you don't know me, I'm the former resident retirement expert on CNBC's On the Money. I'm the author of a book called Retire in a Weekend, The Baby Boomer's Guide to Making Work Optional. In addition, I'm a highly sought-after speaker as well as guest expert on personal finance, radio and TV programs nationwide. But finally and most importantly, I've been counseling people just like yourself for about the last 20 years. So earlier this week, I got a question from one of my retirement intelligence subscribers concerned about the stock market, and her question basically boiled down to, are we ready for another market free fall? And here's what I have to say to that. We've had a great market rally in the past 13 months, and despite all the leading economic indicators pointing up, like housing starts and consumer confidence and auto sales, for example, there is absolutely no doubt in my mind that at some point in the near future, we will experience another significant decline. There's no doubt. What I always tell my clients is this, is that I have absolutely no idea, and frankly, nobody has any idea, whether the next 25% move is going to be up or it's going to be down. However, you need to remain invested in the stock market and be a disciplined investor, because the bottom line is the next 100% move has always been on the upside when you have a diversified portfolio. What you have to realize is this, is that stock prices are totally random, stock prices are totally unpredictable, and they're nothing more than just a daily expression of the greed and fear in the stock market. Right now, the market's been going up for about 55 to 60 straight weeks. At some point, we're going to be due for a pullback. It could come today, it could come tomorrow. In fact, by the time you watch this video, it may have already happened. Again, stock prices are totally random and unpredictable. But you need to keep money in the stock market. And for my private clients, primarily women and couples between the ages of 50 and 70, I normally recommend that they keep somewhere between 30 to 60% of their money in the stock market at all times, because that's been the only place historically over long periods of time, meaning decades, that has been able to keep pace or outpace inflation. So how do you invest your money? Well, for my private clients, I normally recommend a broadly diversified portfolio of index funds, exchange-traded funds, and/or enhanced index funds. Again, broadly diversified in a lot of different asset classes. So asset allocation is very important. Dividing up your money between stocks, bonds, and cash, and all the different subsets of those three major classes. Asset allocation is key, and asset allocation will help to mitigate a downward risk, but asset allocation by itself will not prevent your portfolio from going down in value. Because again, if you own stocks, you know they're going to go up and you know they're going to go down in value, and that's something that you have to live with. For my private clients, however, again, women and couples between the ages of 50 and 70, it's usually 10 to 15 different mutual funds in about 48 different total countries with about 14,000 holdings. Again, asset allocation will help to mitigate downward risk, but it's not going to prevent downward risk in your portfolio. So talk with your financial advisor, review your own situation, or contact a financial advisor. Now, if you really want to protect yourself from downward risk in the stock market, one strategy I also tell people to do is to actually have 2 to 5 years worth of expected income needs in safe money sources, like CDs, savings accounts, or U.S. Treasury bills. And the beauty behind that is this, is that if you need money during a temporary stock market decline, rather than having to sell your stocks that are already down in value and just exacerbate the problem, you have a safe money source to pull from, something that's stable. So I hope you found this information helpful. Hopefully you'll be protected from the next market downfall. And I would love to invite you back to my website if you found this information helpful, because I've got a whole bunch of free goodies for you. I've got an audio program about the best way to invest. I've got a free 30-page report entitled The 10 Biggest Mistakes That People Make When Retiring and How You Can Avoid Them. And I also have a free lifetime subscription to my award-winning newsletter, Retirement Intelligence. They're all yours for free. Just come back to BillLosey.com. That's BILLLOSEY.com. I am Bill Losey. I appreciate you. I thank you so much for watching, and I'll see you back at the website. Take care.